Hello and welcome to the Durham Talents channel. My name is Jesse Durham. Today I'm having a conversation with Tess Hulack. We had a great phone conversation the other day. She was willing right away to come on and let me interview her for a podcast. We know each other loosely because we're in the same space, but that was actually our first conversation. You're joining us for our second one today, where we're going to discuss her origin story with the infinite banking concept, and I hope that you enjoy. All right, Tess, we've already been chatting it up, of course, this morning before we hit record, but once again, how are you today?
I'm wonderful. How are you doing today?
Well, I'm fantastic. I'm excited because we've been looking forward to this. We've had to step back and punt a couple of times to line this up. You're a busy lady. I'm glad we were able to get this going. And I'm so appreciative, that it is our second conversation and you were willing to say, yeah, let's hit record, Jesse. Let's capture that. So what I'd like to do is just hand it over to you. You tell me a bit about, I know some things, of course, but tell everybody about Tess, any background that you would want to, and then we'll get into the infinite banking story. But you just give us the background, if you would, please.
Well, I guess the most important thing for most people is that insurance has been my life for my entire career. As a young person, probably 18 years old, I had a headhunter reach out to me and tell me, I need to get you in the insurance industry because if you're in the insurance industry, you'll have a job for the rest of your career. And I thought, yeah, I don't know if I want this job for the rest of my career, but for 2 years, she chased me down and got me into the industry. So flash forward 30 years later, we go into lockdown pandemic, and somebody brings this guy, Chris Noggle, across my screen, and he's selling this seems greater than life banking concept that I know nothing about. So when we went into lockdown, my full intent was, and he still laughs about this to this day, I was going to prove him to be a scam because I knew that if I, as a financial reporting statutory accountant who answered audit questions, who filled out audit work papers, who knew a balance sheet and could flux it from quarter to quarter, year to year, I would know about this process, and I didn't know anything about it. So I spent the first probably year or so of the lockdown digging in and understanding, and then tested my first policy. By the time I got to my third policy, I got my life license and said, it's terrible that nobody knows about this process. I need to find out how I can help people because with my background, I can speak to the stability of insurance companies. And I want them to know that honestly, I probably would have never been convinced to come to this side, the marketing side of it, or actually the educational side of it, if this had been freely available to all. I almost feel like it's shameful, and I hate to use the word criminal, but I think everybody should know about this process.
I agree. I was furiously trying to write because you're saying some things that I know I want to dig deeper in on. So let's just try and take them one at a time.
Sure.
So you, as an individual, had somebody pop into your life with some desire in general of, hey, you need to be doing insurance. Say what you want here, but who was that? How did that conversation go? Because, life insurance is one of those careers where everybody knows two handfuls of family, friends, people that go to church that have had a license before. So I'm always curious, and I love the industry. The industry merits a lot of fair scrutiny, I believe, as well, right? So like I think we're the greatest professionals maybe that there are out there. We're helping people insure their number one asset, which is their life. But also, there's the other side of that. So, yeah, tell me a bit more, if you would, please. How did that conversation go? What went through your mind? What did you like? What did you not like? Anything.
Well, and I'll say that I was right out of high school, and so I was going through headhunters is what happened, and I was trying to figure out what I wanted to do with my life because originally I wanted to be an attorney, and I actually have an undergrad in law because I've always had a desire to help people. But then when I was working with one of the attorneys, he said, you still, according to malpractice rules, have to represent to the best of your ability, even if you find out somebody's guilty. And I'm like, oh, well, you know what? That's not going to work for me because I'll never sleep again. And during this time, I had a headhunter trying to get me into a job because she knew I was struggling to find a career where I could help people. And I had I did not study accounting in high school at all, but they just during the testing that I had a natural inclination that way. So they kept putting me in insurance accounting. And I think the reason is that I came from that generation where we were loyal, we were willing to educate, we were willing to dig in and learn something new. Because for anyone that doesn't know, insurance accounting is completely different than any accounting that you'll see in the industry because we operate, it kind of sounds like two sets of books, but we operate so that we can tell somebody at any point in time if this business was going to end today, do we have enough assets to pay every possible claim that we can predict, which we call statutory accounting or liquidation based. And then we also do GAAP accounting, which is generally accepted accounting principles, as a going concern, because you want to look at your business as a going concern, but you also want to say for regulatory boards, hey, if anything was to happen today, could we pay every person who's put money and trusted us with a claim? And with life insurance, we know that's really important because we're writing policies on children. It could be 80, 90 years, and we have to know that there's going to be assets to cover those children. So it was a whole, my background and my testing in the employment area just kept directing me towards insurance accounting. So I
Okay,
didn't
so
choose it, it chose me.
I got you. You didn't choose it, it chose you. All right, so I think the two aspects there at a high level, okay, 30,000 foot view, I think that's worth underscoring that if for whatever reason any given mutual life insurance company decided to close doors today, they would have to have, and this is just their mindset, this is their philosophy, this is their modus operandi, this is how they do business, is if they shut the doors today, there would be enough assets, enough liquidity, enough everything to, and that's at such a direct opposite. I mean, I know a lot of small business owners, right? Like sometimes there is a bad month, and if there was any kind of a regulator from the outside showed up, and if they were under that kind of scrutiny, they could not close the doors that day and be whole and, customers satisfied and everybody, paid and taken care of. And so I'm just trying to underscore, I'm so glad that you brought that up. And I think that's what's going to really make for even more of an interesting conversation moving forward, because that's your background, that's your experience, and I really want to bring that to bear. So at a high level, I'm saying that's so cool. It sets these insurance companies apart from, I like how James Nethery says, he says, I feel like it's mutual life insurance companies against the world. I mean, we're just operating at, with a different kind of a partner, a
Yes.
very different kind of a partner. Okay, but then you as an individual were working behind that curtain. You're in those gears and moving wheels and everything. So, I mean, I don't even think because you had like a 3-word title or whatever. I caught on to the statutory accountant. So if you would, just take us through then, beginning to end, because if I remember correctly, you worked in different aspects, different parts, different departments even. So if you would just recap your history of working on the inside, and now we're going to get to that whole marketing versus educating as well. I want to go back to, that was gold, what you said, but just walk us through your whole background working with insurance companies, please.
I actually, because I always laugh that maybe it's that I'm a Gemini. I love to understand every part of an organization. I love to dig in and I've been that way. So in the insurance industry, I actually did help in claims departments when they were taking paper claim files and bringing those live into a computer system. I actually was a marina underwriter for 2 years. Whenever there was a project that came up, I worked on mergers and acquisitions. So when we would go through a period of buying other insurance companies, I'd go on the teams that would look for synchronicities and bring them in. So I got to be involved in all areas. And so what it allowed me to do is to kind of see it strongly because I don't, I'm a different kind, I think it's a different kind of person that works in insurance, but I want to understand it all because if I'm going to put my name to it, integrity is everything to me. And what I found is I'll tell you, like a lot of people think that like our year-end process would start anywhere from December 15th and it would go till June 1st. So when somebody talks about year-end, I'm like, You have no idea unless you've walked in my shoes because we would have regulatory requirements because we have the National Association of Insurance Commissioners who is saying, okay, give me your preliminary numbers before the auditors are finished with the audit. I'm going to run them through these. In the industry, people like to call it key performance indicators. We have things called like risk-based capital calculations, IRIS ratios. They'd run all the numbers comparing all the insurance companies, and they'd start spitting out people who they were going to start oversight on. Because the one beautiful thing about insurance is you don't get to make your own rules. If you want to sell your business, you put a proposal together, you go to the regulatory board, and they'll say yay or nay, because their goal is to make sure at any point in time, all policyholders are protected. So I think that was the beautiful thing is that that was probably the hardest thing for me to come into this side of it, as I come from such a controlled environment that I'm sometimes afraid to reach outside of the box because my hand's been slapped so many times for trying to reach out of it. But those rules are there for the protection of our clients. But I talked about that first window, which is March 1st, where the regulators are looking at similarities and anybody who has red flags. But after that March 1st date, the whole full focus is on that audited statement. You gave us some preliminary numbers. We've identified who we're going to start to look at. Now let's pin down and make sure we're confident in those numbers. And your auditors are digging in and pulling. And I'm telling you, in the early days, they would pull out these pulling file folders with 500 manual underwriting claim files that auditors would sit in a room. We had war rooms that we would have a quarter of the floor, and they would be reviewing these underwriting files or these claims files. So to me, it's one of the most secure environments because there's always oversight from somebody. So through March 1st, regulatory so that they can look for unusual performance with the ratios, the key performance indicators. And then by June 1st is the audited. Here we are, we're one of the top 3 auditing firms. We stamp this, that this looks like a going concern, and we support what they showed you on those statements that they provided you in March. So it's like two-tiered, and it takes half the year to get it done.
All right, so what I'm hearing is it sounds like there are audits on the audits.
Yeah, in a lot of cases, yeah, because you can have an NAIC audit, you can have the state of domicile audit, you can have you know what? It's almost funny. Everybody worries about the IRS audit. In our industry, the IRS audit was probably, yeah, what are they going to do? Say maybe you calculate something a little bit wrong and you pay a different tax. It was never the high anxiety thing because our anxiety was what's the NAIC going to say? What's the state regulatory board going to say? Because what's the not only are those two auditing, but you have your public accounting firm auditing, you have your actuarial firm auditing your reserves to make sure those are adequate. So internally, you've got audit teams, and externally, you have audit teams. And even these audit teams are managed. Like anybody knows, you're familiar with the word nepotism?
Yes.
Okay, so for those that don't know, nepotism means that, especially in accounting, but anywhere in an insurance company, no related parties can ever work for each other. And the reason being is that if there is some kind of a trauma within a family, the most honest and morally strong family can be influenced if they're facing an extremely hard time. So they put a block to stop that. Well, the insurance industry went one step further and they said, okay, we have outside audit firms that come in. And what is the case with audit firms? Insurance is such a unique animal. There are only the main 3 audit firms that could ever audit an insurance company, and relationships start getting built between the higher ups of the insurance companies and the audit teams, the managing auditors. So even on top of that, you have this little nepotism rule that they look at throughout an entire company. And you're talking about companies that can have thousands of employees, but they ask that question every year. They added a new level to protect policyholders that said a model audit rule. An auditor, a managing auditor, can never be on an account for more than 5 years. Why? As an industry, we found that an auditor builds relationships because one of 2 things happens with a public auditor. They either become a partner in the audit firm or they work for one of the companies they audit. And they said that can cause a problem and can make somebody make a bad decision, and we're putting a halt to it. So every year in the fourth quarter, you file something with the NAIC saying, this is who my audit team is going to be. This is how regulated they are. This is who my audit team is going to be. This is who my managing team is going to be. And if there's even a case where you can't get somebody new within that 5-year window they give you, you better explain it and they tell you if it's okay. So you're not the sole runner of your business. You've got somebody I think is a little stronger than the IRS standing over your shoulder trying to make sure that you're doing it right. So, I mean, the IRS is there too, but it's never the one that I ever worried about. I didn't do the taxes for insurance companies, but it wasn't ever the high concern because we had so many other people with their hands in the pie that they were just another one.
I got you. No, your standards are already so high that dealing with the IRS and the normal that has to be done there is much less strenuous. So the impartiality, hearing those standards of this is how we run things to make sure that there's an impartial look at data, because I mean that's just our human nature. I mean we're humans. We're going to develop relationships. So I love that outside perspective, that detachment to say nope. To be impartial enough, this is how we're going to do things. Every 5 years, we need to get fresh eyes, fresh relationship, looking at the data and keeping things, legitimate. And so, real quick, I love how your story is actually making me think of one of the prime examples that I like going to in the book, which is this. When you were talking earlier about war rooms and audits, I love seeing the copy handy on your end as well. When Nelson is talking about the First National Bank, Midland, Texas, and he talks about the problem that bank ran into because he's talking about the imbalance that they let happen between the capital, the reserve capital that they should have had on hand, in contrast with the amount of deposits that they had, in contrast or in conjunction with the loans that they had. So those three things: capital, deposits, loans. These insurance companies, from everything that you've described, they've actually got the capital. Because of their own standards, because of the regulations that are in place, just because of how they've been doing business for, all of them that I personally own policies with and that I write policies with, over 100 years, being profitable. Not just meeting their requirements of providing death benefit and access to leverage cash value, etc., but no, being profitable, providing dividends. So they actually have the capital, and then the deposits are there, but in the insurance world, of course, it's premiums. All right, so premiums are there. And the insurance companies, then when you get to that loan factor, they're not loaning out multiples of what they actually have like the commercial banks are. So they're keeping a level of standard, okay, with that liquidity, with that assurance that we talked about earlier of the capital reserve. They got a contingency fund for a contingency fund.
Yes.
Right?
Because even those investments, we have something called the SVO, the Security Valuations Office. And one of the calculations that they go through every year is they take a look at our investments and they rate them. And they'll discount your investments, and you still better be within that range that will cover your potential losses into infinity, basically. And there's still a backup plan if for some reason nobody had the right calculations. They have, which very rarely ever happens. I think I only paid for maybe one or two companies in 30 years. But even at the tail end of all of this, and yes, I've been there when the regulatory board came in one day and said, we're taking over, because they will do that. You work in an insurance company, it's not your company. They can come in and they can take over. And if it gets to a point where they're running it out and somehow the calculations didn't hit, because again, you are estimating best possible estimate based on history, based on law of large numbers, based on, it's all calculations, but they're pretty pretty close and pretty accurate with the number of people that come through. But if you come up a little bit short, what happens is they have this thing called the guaranteed fund. And the guaranteed fund then actually goes to every insurance company that operates in the state that claim originated in, and each insurance company has to pay based on their percentage of written premium in that state. They have to pay the part of making up that shortage. And I want to say I only saw it happen twice in 30 years. Because yes, we are human, and even with all of these things, there are like nobody ever expected the pandemic to happen. Now, did that impact our business negatively? No, not really. You would have thought that it did, but it really didn't to the degree that we were all kind of concerned that it did. But there are additional, I mean, the layers, I could probably go on for days on the layers, and that's where there's so much confidence. And you said something too. It's no discounting dollars. This is Austrian economics. This dollar better be 100 pennies on this side or $1 bill on this side. You don't get these discounting things. If anything, they'll say, we don't think that this investment is as secure as what it was rated. So we're going to discount it, and you better have more money. So it's not favorable to an insurance company like it is to a bank. And I think that that's probably one of the big misconceptions is people want to compare banks and insurance because there's a lot of parts of it that appear the same. But the number one biggest thing that is not the same is that banks use fiat money and insurance companies are Austrian economics. A dollar has got to be a dollar, 100 pennies. There's no discounting, and it's got to be backed up by something.
Yeah, there's so much there. They are similar in that they're big, old financial institutions with hired help in these different departments. But the way they're operating is definitely, what I'm hearing underscored right here is, the First National Bank, Midland, Texas, it was the owner's behavior where they're having all these bad loans, and not only bad loans because they're taking their own loans, the owners, but then they're not even performing loans. And then, of course, that affects deposits going down because people are hearing about the rocky ground that the bank is on, and then they're not maintaining enough reserve capital like these insurance companies. So the word durability really comes to mind for me. That's what I'm thinking as you're describing all these different iterations of guarantees, at the end of the day. The durability of these insurance companies. So one more time, if an insurance company does hit a rough patch, the normal operation is this, that of course, regulators can come in, and they are coming in and they are doing these audits and war rooms. You mentioned war rooms earlier, and they're saying, hey, no, this needs to be addressed. And then the insurance company you correct me if I'm just trying to say this in a layman's way. The insurance companies get to address any issues that they have crop up. They have contingency funds and everything. They try to rectify whatever it is that they might need to rectify. But if it goes on long enough too, insurance is a highly regulated industry. The state or whoever can come in, NAIC or all of them, can come in and say, no, we've got to take over here. And then if there is a shortage, what you're describing there, even to the point of other insurance companies in that state that are doing business in that state have to step in and make it. So there's just such durability in place that's not the case with banks that have gone bankrupt over time, where it's the government stepping in. It's just a completely different scenario from these private companies. Okay, so even in the worst case scenario, some company goes insolvent, it's other private companies that are coming in, right, and absorbing that. That's the level of protection that there's there. Whereas, I question things like, that protection that you see when you walk into the bank of the FDIC this, and all right, so is there anything there that you'd like to elaborate on?
Well, because we have talked about it, I've actually experienced regulatory oversight, and I'll actually share this with you so that it maybe will shed some light for some people. I worked in Michigan, a small insurance company that wrote preferred standard, non-standard auto. They had a bit of liquor liability and they had a bit of scaffolding liability, but it was a smaller company, and it was a great experience for me because I got to see everything. Well, we had one claim that came up in the state of Alabama. Now, this is early on in my career because I was in my 20s at the time this happened. And the owner came up to us and he said, we have a bad faith claim. Bad faith is a no-no in the insurance industry. It will destroy a lot of things. What I want to tell you is that the state regulatory board, because when you file your quarterlies, you file any lawsuits that are not in the normal course of business. Bad faith is not normal course of business. You report it. The second that hit our statements, the state came on board and said, look, if this claim, this one single claim is settled against you, we want you to either influx more money or raise money to increase the surplus of your company. Because another kind of side shoot is that you can only write premium based on what surplus you have in your company. So that's another safety feature we can talk about later. But they said, if this bad faith is settled against you, you've got to get money back into this company. And if you don't, we'll take over. And he said, I'm not doing it. And they said, we'll take over. So this went on for about a year, 2 years that we knew this claim was out there. It was bad faith. If it settled against us, we were done. Friday comes in, he walks in and he says, bad faith claims settled against us. We give it 2 weeks and the state will begin to take over. Monday morning, I'm sitting in my chair and the state regulator comes in and says, you work for me now. You're fired, you're fired, you're fired. And what he proceeded to do is he found a company in Texas to buy the auto business because it was profitable. He ran off the scaffolding. He didn't like the liquor and he ran that one off. And he more or less dissolved the companies before it ever got to a point where it went to a guarantee fund. So, I mean, there's that stuff that even before you would even get to a guarantee fund. I know I just added another wrench. Sorry, but that was early in my career, and I lived that. That was like, I I can remember because even just to add a little bit to the story, he was kind of a cocky man, and I was pretty young. And he stopped paying my payroll checks. He stopped putting my payroll in my. He stopped paying my medical benefits. He didn't put my 401k money in. And I went to the former CFO of the company that I work for, and I said, what do I do? And she said, the second they took over, they made us sign a contract that we can't touch you. And I'm like, what are you talking about? The state can own me like that? What is this about? And they said, well, no, you're an at-will employee, but we cannot take you directly from them. If you have an issue with them, you're going to have to go to them and confront them because you're young. They know it's going to be hard for you to do. And you're going to have to tell them, you have 24 hours. You take care of the things that are for me personally, or I resign. And within 24 hours, he paid everything. And the relationship struggled a little bit because he didn't expect me to stand up to him. But he had a job to do. And my job was to protect myself during that process. But what happened is it was a stop order. The second the state came in, those people that I worked for couldn't touch me. I had to be released or quit. They could not touch me direct. Now that's a lot of control.
It is a lot of control. That is really neat. And it's no wrench that you've thrown in. You're painting an interesting picture. Business is business, right? Like, obviously, that type of a person is stepping in on a triage situation. We're trying to stop the bleeding. So there is that. You still got to do right by individual people and not, shut off their benefits and whatnot if you shouldn't. So I'm glad that you stood up for yourself and that happened the way that it did for you. But it is terribly insightful to another aspect of the durability of the business. So I'm thoroughly enjoying this. And I want to dig in enough in this area of your experience, of your career, to really help people appreciate what I know we're going to transition to, which is infinite banking, because you have already put it out there that when you were exposed to the concept of becoming your own banker, such as it was at that time, you were ready to poke holes in it. You were ready to question it. All right, so you had your presumptions, you had your valid experience, valid inside experience. So I guess then my question is there anything else that you would like to put out there that you feel like people should know that you have seen behind, the walls of operating within a life insurance company that would help them, appreciate what we'll end up talking about as it concerns infinite banking and the education side that you're on now?
I can actually even speak to, because I experienced it firsthand as well, as there are things called rating agencies, and everybody isn't familiar with rating agencies, but the big one with the insurance industry is called AmBest, and we've heard of Moody's and S&P. They rate insurance companies. One thing we know about insurance companies is if you want to be profitable or you want to make it in this industry, you have to write what they call a paper, and that means that this rating or agency takes a look at your financials. Now, they're not regulatory oversight. They're just a rating agency that's gathering information and classifying you based on all the businesses they see. But they can issue grades to your company. Now, they're not regulatory oversight. And you have to keep that A paper because nobody in the industry wants to write with anything below an A minus paper. Well, when all that went down with like mortgage-backed securities and everything was being discounted, I worked for a company that was A minus paper, and there was a last minute change, and they devalued our investments with something called other than temporary impairment because there was so much uncertainty at that time. And we dropped from A minus to B plus paper. Now you wouldn't think that's a big deal, but it was a big deal. It was huge. So I'm in the insurance department, I'm in the accounting department, and we have two teams. We have one team that is working with Ambest trying to get that paper upgraded, and we have another team that's negotiating with other insurance companies that if we can't get this A paper back, can you take our book of business? We'll give you a percentage. We'll handle everything like we've been handling it in the past, but you will actually be the name on the top of this paper. We'll give you a commission for it until we can get our rating higher again to pull that paper back. And you got to shop it because you can only take on premium for the amount of surplus that you have. Because another thing about the insurance company is you can only write premium dollars for the amount of money that is, say you have assets, say you have a bank account of $100 million and you have 900,000 in liabilities. You only have 100,000 you can write in premium. You can only write based on your surplus. Mutual companies usually $1 for surplus for $1 premium. Some of the public companies and some of the private companies can go up to $3, but that's also a regulatory rule. They review that and they'll come at you about it. So we had to shop to find a company who could take our book of business and that we could pay them a fee if we couldn't get this rating up, and we lost the rating. And so we had to write with this other company, and it took about 3.5 years, but they were able to recover the A paper and then take that business back. So even though it wasn't regulatory oversight, an AM Best rating under A paper can really put you in a difficult situation because we would have lost that business without the A paper. I know, another one. Sorry.
It's so cool. No, don't quit saying sorry. I'm asking for this kind of stuff, and I don't even know all that there is in your experience to know how best to even ask to get this kind of information, because I believe it's terribly insightful. It reminds me again, I said it earlier, business is business. So as I'm hearing you describe this, I'm wowed by, okay, here we're seeing a real life example of how this insurance company in this situation had to follow these rules, had to abide by these standards, had to deal with this regulation. But also at the same time, we're being really creative and we're reaching out to this other company and say, hey, can we work a deal here? Let's do something that's going to be mutually beneficial. We'll pay you for this. We're leveraging your credibility and making this happen. It's very neat. The creativity sticks out to me.
And I'm going to share something because at the time that happened, it felt dishonest to me. It really bothered me. I felt dishonest about it. So I sat down with like the upper management team and I said, help me to understand this because it feels dishonest to me. I feel like we're lying to our policyholders. And they said, wait a minute. What do you think happens the second we do this? We're giving away this percentage of our commission, and it's not a regulatory oversight. We're giving up this much commission to write it over here. And what do you think happens the second that we send this business over there? And I go, what? And they said, you just gained a whole new level of audits that you're going to have to complete. And I'm like, oh, rats. Because what did it do? It created a whole nother team because now that you're reinsured with these people, you got to pass the reinsurance audits. So it really even tightened down. Not that it needed to be tightened down. It didn't need to be tightened down, but it created another layer of audit on everything that was out there. So at the end of the day, I saw the value in it because all they did is said, "Hey, you slipped just a little bit, and really no fault of your own." It was the case of all those downgradings and all that mess that we went through with mortgage-backed securities because we had a lot of mortgages on our investment portfolio at that time. But it was a lesson learned. But the lesson learned also cost you some money and put you through an additional layer of audit until you got that paper back under your name.
So are you talking about around the 2008 era when you talk about the? You're right. So just to clarify, just to make sure, because this video is going to be out there for a long time. I'm glad you shared your inner thinking through that. I can appreciate that, and it makes me think all the way back to how you were talking about. Well, I wanted to be a lawyer until I learned that I'd have to represent legitimately, criminally liable individuals, and that's not for me. Okay, great. But it's insightful into how you think and who you are and the gifts that you have. It's terribly interesting. And I'm still even mentally processing through what that would be like, because I can appreciate what you're saying about having your doubts, wanting to be certain about like what us going about this. Is this doing right by the client? That's great. That's a beautiful come from. And then of course, if I can put on my business hat and talk about, some other things that you're making me think of and that you've brought up, like reinsurance being one. I want to talk about that here in a second because you introduced the word and it merits, some commentary, I believe. But just the creativity between private individuals or private companies to say, hey, if we bring this to the table and you bring this to the table, is it mutually beneficial? Can we come to terms? Is this going to help your clients, our clients? Are we going to be better together, even if it's for a season? Even if it's for, I think that is, that's how things should be, is like private individuals and private companies should be doing stuff like that. And if it works, it works. If it doesn't, it doesn't. And the market speaks. You know what I'm saying? It's like that is the way that it should be. In my opinion, versus, the government coming in and saying, this is how it's going to be, if that makes sense. I understand regulated industry, etc., but also anytime that that private individuals can come to terms, it's better.
Yeah.
Reinsurance. Go ahead. All right.
And really, we got to negotiate those reinsurance contracts. It did all have to go, that's another thing too, part of audit. Every contract they rewrote, whether they were pooling agreements, which just meant that if we had six, because it's common for insurance companies to have multiple companies. Like you might have excess and surplus. And for those that don't know, excess and surplus means it's an unusual risk and it's one that the average company doesn't want to take under their approved rates. Because even the rates that are charged, you prepare documents through actuarial, you send it to the regulatory board and they say, yay, you're within a range, we'll let you charge this rate. So you can't just out there and arbitrarily charge. So if you get a client that doesn't fit within your parameters for this rating system, there's something called excess and surplus. So insurance companies will have a different company that's called their excess and surplus company, where they can take a look at helping that client that doesn't fall within a normal range for an acceptable rate that we have approved with the regulatory boards. So there's so many layers to it. And then reinsurance is that layer where, like I mentioned earlier, you can only write premium based on what surplus that company has. So for those that don't know, you have a bank account that's $100, you owe $90 in credit card, you got $10 left. That's all you can write in premium. Well, what if you've got a huge need? How do you get that business? You've got the connections, you've got the agents that are writing this business. How do you go about getting it if you've got $50 worth of people who want premium and you've only got $10 in surplus? Well, that's where this reinsurance comes in. There you go out to this company and you say, how much surplus do you have? Can you take part of this? What's your rating with the AM Best rating agency? How do you look? Can we make a deal? We'll give you 3%, 5%. We'll shift over. And there's different ways, not to get too complicated, but you can do a quota share or you can do a case by case basis, but you can reinsure with this company. And then what it happens is if you're doing a split, you make sure you stay within your surplus requirement to meet your rules with the regulatory boards. You make sure they stay within their part and you kind of split it. So you split the premium And then later down the line, when the claims come in, you split the claim payments. So this all happens behind the scenes. You as the client are never going to see it because we as your ABC insurance company are going to pay it. But we're actually sending billings out for reinsurance saying, hey, we paid you this premium. Now it's time to recover the paid claims. So it's very layered. In a lot of ways, I think it's a cleaner version of what happens in the medical industry because I spent a period of time in medical malpractice, and that just gets really messy because there's a lot of uh, unusual twisting in the way payments are made back in the medical, but they try to mirror what I think is happening in the insurance industry, and it's done very well in the insurance industry, obviously, or we wouldn't be existing for 200 years. I obviously, I fought getting into this industry and I love the industry because I like things done right. And if something goes wrong, it's not for a lack of effort. And there's usually always a safety net. There has always been in my entire career a safety net to fix things as fast as possible and to protect people. And I have never seen another industry like this, in my opinion.
Right. I haven't either, and I don't have the same inside perspective that you do. I'm an outsider's perspective in a degree, or I have my lane. But so here's where I think it does. Well, here's where I know it does matter. Reinsurance to the individual that's listening to our conversation, Tess, and they're either vetting the concept or they've already implemented the concept and they're already on their journey. Reinsurance is a great and a beautiful option. So you've talked about it from a high level, which I appreciate because that. But now, if we say, well, as an individual, let's say somebody comes to me, we're applying for one of these whole life policies from one of these mutual companies that have paid dividends, that have a high rating, etc. And coincidentally, that was something I just did want to underscore again real quick, that, Nelson in the book talks about, mutual companies being preferred for sure. So we're looking for mutual life insurance companies that offer whole life insurance that have paid dividends for at least 100 consecutive years and that have a high rating. So that's where your ratings, your Moody's, your AM Best, that does matter. It matters on paper, but it actually is an indication of how a company is doing business. And it's cool that you reiterated how that's a lens that is separate from the regulatory lens. So it's neat. But reinsurance for the individual. Let's say they apply with us because they're looking to implement this IBC concept. And maybe because of their rating or whatever the case may be, they're not offered a policy from that company. Now we can try with another company, right? But another option that can be used is a reinsurance, where we are reaching out to somebody else who might look at that case and say, oh no, you know what? We have the ability to cover that. Right? Because we want both these things at the same time. You and I, we're helping individual people and individual families implement this concept. We want to help them get policies where we can get policies, but at the same time, we own policies from these companies. We want them to be stable. We want them to be paying dividends for the next 100 years. We want them to keep the books above board. We want them to be operating in a surplus where they can continue to provide this dividend for us. We want them to give appropriate ratings to other people who join us in this mutually owned company. So we want both those things at the same time, and reinsurance at a me and you level can be another great way for somebody to get a policy by leveraging those relationships within the industry. Anything else that you'd say there, maybe at the me and you level?
I think that does say it very well, and I think it does seem scary because I've even been on like Ask Me Anythings with Chris Nagel's group, and the idea of reinsurance scares people, and they'll say, well, then I have to dig into this, and I'm like, well, you as the person purchasing the policy, you don't have to, because the person who's writing it, they're the actual responsible party, and once you understand this idea that the same level of auditing that is happening here with that primary person, that's got to happen on this next level. They don't just go, okay, yeah, you're 3 levels down, we're not going to worry about you. They worry about every level, because one of the big areas that was always audited with us, big focus areas, is that they always look at unearned premium reserves, which simply means that if you write a policy and you pay 12 months up front, you may have only earned 1 or 2 months. If your policy started like October 1st or November 1st, you might only have a couple of months in this particular year. So we're going to have an unearned premium reserve because if for some reason you cancel your policy, we have to have that reserve there so that we can pay you back because we don't want it to appear to be an asset. So all these tools are, and I don't know where I was leading because I know I was talking about reinsurance, but reinsurance, all these things are audited more highly looked at because of the big dollar volume. So unearned premium is highly audited, reserves are highly audited, and reinsurance can get really big on the balance sheet. One, because you're paying out premium, and two, you can have, like you said, 50, 60, 70 years when life insurance. Now, property and casualty is different because the tail or the length of time to settle is shorter. But when you have liability or life insurance claims, you can have lots of years out there. So they're going to be looking at those recoverables, meaning my reinsurance recoverables. Is your team going back to those reinsurers and collecting that money back? Because that also could jeopardize a company if you're not monitoring it. So they know not only do you have to, on the front end of it, underwrite it, they also know that you have to manage it on the back end of it to pull it back in to keep everybody properly funded.
Yeah, for the individual, it's nothing to be scared of. The one thing that sticks out to me is, typically if you apply with an insurance company and you're denied, but then reinsurance is on the table there. Again, it's not the only option, but it's one option. It is typically so that if you do apply for reinsurance and happen to be denied there also, which again, it's not the end of the world. Nelson has a chapter in the book. If you're legitimately uninsurable, just go to the next person that you have an insurable interest in. We have a policy on my wife, policy on our children. Right? So we all want to get policies, but if you're legitimately uninsurable, it's not the end of the world. But even if you're denied, a policy through reinsurance, it would mean, though, that whatever you may have been offered from the originating company is not going to be on the table anymore. So I would tell people, if an insurance company says, well, we'll give you a whole life policy, but we're not going to add a paid-up additions rider. Sorry, we can't offer that. You could apply to reinsurance, but it doesn't mean that, if you're denied on the reinsurance that you could then come back to the original company and then accept a policy. But if you're working with people, they'll help you navigate that.
And you're right. There are so many options with who else you may have an insurable interest in, so that there are so many options out there that reinsurance doesn't need to be something that somebody's overly concerned about, because like you said, there are so many tools available that it's there and you can utilize it, and if it doesn't work, you move on to the next step.
Exactly. So this has been so terribly interesting to me. I love the ground. There was no way that I could have expected we'd cover this much ground, and we'd end up talking about reinsurance. And okay, so
it's my life, my blood.
Well, I know, and that's what makes me want to dig into it. All right, so let's do this. You've got an extensive background that we've not even tapped all into, but it's extensive and it's varied. It's not even just extensive, it's varied. I mean, just as, like you mentioned things that we haven't even touched on, marina this and acquisitions that, which I do think is a terribly interesting point. You touched a little bit on, what it's like from the inside when an insurance company is acquired by another one. And, these companies have been around so long that business is done that way. There are mergers, and I own policies with mutual life insurance companies that own other companies. One company might specialize in something like you've mentioned, and another insurance company might specialize in something, but they're all under the umbrella of one company. It's really neat. Let's dig in though, Tess, on when you came across this infinite banking message. What stuck out to you that you loved, liked? What stuck out to you that you're like, nope, that can't be true? I want to know the pros and cons. I want to know about the inner workings as you're watching, learning. How soon did you get to the book? I want to know all that stuff, please.
It started at the lockdown. And for those that don't know, I am a bariatric patient. I started a BMI of over 60, and I connected with a guy online during the lockdown called Doc V. He was mentoring patients during the lockdown to keep them on their health journey. Well, he's good friends with Chris Noggle. And this little punk Chris Noggle, I love Chris. I really love Chris. But at this moment, he jumped on and he was talking this shtick, I thought. And I'm like, I have fluxed, and what that means is I take balance sheets one quarter to the next quarter, 1 year to the matching time a year later, and I flush out what happens and I have to explain it. Did we have a catastrophe? Was there a hurricane? Was there a mine that collapsed? Was there a state that had a big lawsuit? What happened to create change so that we can plan and adjust for it? And I'm thinking, if there was something like this in those balance sheets. Now, I did predominantly most of my career in property and casualty, but why don't I know about this? Because all my education that I take covers all areas, property and casualty, life. When you go to the institutes and because I'm not a CPA, my credentials are what they call an AIAF, which is an accounting, insurance, and finance designation issued by the Insurance Institutes of America. It's the highest designation that an accounting professional in insurance can get. So I'm like, why don't I know about this? This can't possibly exist, because if it did, I'd know about it and they'd be talking about it in these training classes that I take every single year. Why don't I know about this? So I started digging in and I'm like, I read the book and I listened to Chris's videos, and then I asked people that knew him. I said, tell me about Chris Noggle. And every single person said he's as honest as the day is long. And I'm like, where am I missing something? So I kept digging in and I kept reading and I kept learning about R. Nelson Nash, and I kept asking because I still worked in the industry at the time, but nobody knew about it. Then I'd say, do you know anybody in a life company I can talk to? And nobody knew about it. And we even find that in the companies that we write with, there's only maybe a handful of people that understand it. Now, that's my personal goal with my background, is that's going to change, but nobody really knows about it. So I started digging in more, and I was scared because as a single person in the lockdown, stuck in an office, I can't leave the house. I thought I got to at least try. If I don't try this process and see if it works, I haven't done a due diligence. I can't say he's wrong and I can't say he's right. So I wrote a policy with my emergency fund. And I'll tell you, it scared the crap out of me because I thought, I'm single. What if I lose my job? What if they're lying to me? What if I can't get a loan? What am I going to do? So I called Stephen Nagy, because he was the guy that wrote my first 3 policies. And I said, Stephen, let's just start with my emergency fund and the bare basic of what it would be for somebody my age. And we wrote that policy, and I'm on pins and needles because all I have is a computer in a home that I'm locked into, and I'm waiting and I'm waiting and I'm waiting. And I'm like, everything says this is legitimate, but everybody around me is telling me it's a scam. I can't find anybody in the industry who even knows this exists. And I'm waiting. So that first policy is approved. I pay that first policy and I take out the loan because I'm like, I can pull that money out, and whatever I've got, I'll put in the bank. And at least then I know there's some money there if I need it. And I'm waiting and I'm waiting. And I go out to the mailbox one day and I opened it up and the check is there. And I'm like, oh my God, it works. It works. And I opened up the check, and I live on a main road, and I called up Stephen and said, let's start number 2. And I never even left the mailbox. So I was scared. I researched. I knew it should work, but I still had to test it, because what do they say? Test, but verify. Trust, but verify. And I had to, so I took that bare minimum. And now my thing is, I wish I had known sooner. And even when I left the insurance industry, because when I saw what this was and how it could help so many people, my heart told me that you've spent a lot of years behind. Honestly, I believe, and I know you believe in God as well. I honestly believe that God put me down a path that He did with the intent that I'd be sitting in this chair one day. I think His intent was always, because I fought it. I fought it and I fought it and I fought it. And I'm like, I don't want to do insurance for the rest of my life. And every time I try to like field out somewhere else, I'd get pulled right back in again. And I'm like, I don't want to. And I think it was always to get to this point, because my heart has 2 major desires. I was not able to have children. So my desire is that I love seeing multiple generation policy systems set up. I set one up with somebody I've been working with for 3 years. Linus and I just did, and we have 5 policies. And one of the members of the family called me and said, "I get it now, and I want to set some up that I'm actually working myself within the next 6 months." So that's one of my goals. And my other goal is I know the insurance industry. I know what they're looking for. I can't believe they don't know about this. And I am going to pound on their doors until I get somebody to listen to me, because if we got them to understand this, then it would be the beginning of making this common knowledge. This needs to be common knowledge, because I believe that if we took the financial handcuffs off and allowed people to take care of their financial lives through this process, they would be able to be more in tune with what their God-given gift is, and they could pursue their God-given gift without the financial handcuffs almost being the devil's work, preventing them from doing what they were brought here to do.
That's so exciting. So for everybody that is listening and you heard Linus's name, if you don't know, we have had an interview with him on the channel as well. Make sure to check that episode out. Tess, oh man, you're getting me fired up now that we're talking about this kind of stuff. All right, so your desires, family banking systems is what I'm hearing. Multi-generational, independent, autonomous families. And then teaching the insurance industry, which, my heart goes out to you there, because we know that Nelson, of course, made a foray there himself, trying a top-down approach, and then he ultimately started what's this grassroots movement of bottom up. But you do have such a unique ability. I'm thinking as you're describing these things, Tess needs to be writing a book on top of speaking. So I'll plant that seed now while I'm thinking about it.
My second book?
So, all right, so go ahead. We're here to talk about the first book. Say anything that you want to there. But yes, I am specifically. All right, let me quit talking. You tell me.
I'll just say, and it's based on getting around people that are living life differently. And when I found Chris Noggle, one of his CRM manager, the guy that oversees all of his CRM work, a year ago this month, he approached me and he said, "Tess, you wrote a story 2 years ago." And I said, "Yeah, I did." And he said, "How come it's not been published?" And I go, "Oh, it's sitting on a shelf somewhere." And he looked at me and he said, "You got 6 weeks. And if you don't get that book out, I'm going to be," to quote him, "pissed at you." And I didn't want it to be pissed at me, so here's the book. And basically, it was for me, the courage to change is that during this process of lockdown and during this investigation into IBC and during the investigation into learning to live healthier, I had to challenge everything that I had learned in my life. And I think that's where IBC comes into all of this. We were taught a way to live our lives financially. And unless we have the courage to challenge what we were taught and to try to look for different avenues, or to open up maybe the polluted lines between us and God to hear maybe the messages he's trying to get down to us, but there's so much stuff over our heads right now. If we can have that courage to try to clean out the noise, I think that we'll have an opportunity to heal our lives. And when we heal our lives, one thing I will say, 2 weeks before I went to print with this book, I was praying and I got a message from God. And the message was he wanted me to put a passage in my book about unconditional love. And so I thought my publisher's going to shoot me, but I've got to get this in. So just before I went to print, I added the passage underneath the copyright. Let's see. I added a passage about unconditional love underneath the copyright. And then I added the love is in the end of just before it goes to the first principle. But what was kind of funny is that after I got that message from God, I looked at my first principle in the book and it was self-love. So that told me that that was a message from God to get this moving forward. And all of it has been that, whenever I've even questioned, should I be an agent or should I be forward and front facing, trying to reach clients, the message has always been that you have free will, but you can reach people, and I want you to try to reach people.
Awesome. So I knew that book was out. I have not read it yet. I should have emphasized that. I should have remembered that. I love what you're saying right there. It makes me think of, we as people, we can be so down on ourselves, and there can be plenty of reasons to. We're not without faults. I'm not without faults. But the counter to that is, you know, if a holy God loves us so much that he would give his all for us, who are we to contradict what he has said? You know, that's also my perspective. So fantastic. Tell me then, Tess, what was there anything else that as you're exposed to either Chris's messaging or, you know, I'm not trying to hone in on him. You've mentioned him. You probably went down the rabbit hole and you saw a bunch of stuff from a bunch of other people, but anything online that you specifically remember going through your head that you had to work through? Like what kind of work throughs? Was there any specific thing that you had to get an answer for before you did decide? Okay, I'm gonna trust but verify. I'm gonna pay a premium. I'm gonna take my policy loan. Any inner workings?
Yeah, the thing that hung me up the hardest about this is that for those that don't know, we write with mutually owned insurance companies, which means basically when you get a policy written, you are an owner of the company. Then we also have our policies that are compounding year after year. And when you take a loan out against it, that balance never goes down. And I could not get my hands around that. How in the world can we allow this money to be gone and we're not recording it? As a person who's gone through a gazillion audits, I could not wrap my hands around that. And I kept saying, where's this money coming from? There's got to be somebody accounting for this, because conceptually I wasn't connecting with the idea that it's collateral. Basically, your cash value is the money that you're putting in. This is my premium dollars. I've paid 100 premium dollars. I've put it in. There's $90 here that I can take for a loan. They're using that collateralized against the death benefit. So if I was to die, they're going to deduct the $90 before they pay my family. So it's a collateralized loan. The cash value is kind of the collateral. The premium that you put in, it's the amount of money you put in. So they're letting you borrow what you put in to feed your policy, and they'll just deduct it if you die. But the thing that really threw me is, why don't they reduce that cash value? And I kept digging into it. And the word that didn't come to me at first was that non-direct recognition. And I thought, I've never known anyone in accounting to be non-direct recognition. It didn't sit well with me. And I kept saying, I know that the general fund is giving them the money, but is this a common practice? Well, if anybody out there wants to research it, you can go online and look up non-direct recognition companies. Yes, it's common practice. I because of the accounting end of it, and we want everything to the letter of the law, until I can understand that the cash value that I'm loaning is collateralized by that death benefit, I couldn't get my hands around it because it felt like a piece of the accounting puzzle was missing. So that was the area that really, when I finally understood, oh, I put this money in to have the policy still has this much in value if I was to pass away. They're just allowing it to sit in my account because guess what? I'm an owner of the company too. That's a really basic way to say it, and there's a lot more details to it, but that piece was what really messed up the accountant in me.
No, I got you. Everybody has to work through that part, but it is a neat light bulb moment when you could realize, okay, yes, I pay premiums and I got this guaranteed death benefit. The insurance company's on the hook for that thing, which means every day that I live, I get closer and closer to that number. So my value, the cash value of this private entity that I own must increase, must go up, regardless of whether I'm leveraging that value in the meantime or not, right? Because yeah, in the event that I die at this point versus this point versus, they're just going to deduct that outstanding loan balance that I've already accessed ahead of what I expected to be, when I'm 121 years old. They're just going to deduct that from so that collateral relationship. Okay, very cool, very neat. Tell me this, when you got to the book specifically, what did that look like as you're reading from Nelson? Was there something that you read and you were like, I love that? Was there anything like that right away? Or was there the opposite? And you're like, again, well, I'm not sure about that thing. What are you saying there, Nelson?
I loved everything about the book, but I have a cool story about the book. The family that Linus and I just got the 3 generations, 5 policies going, and they want to start more. The daughter and the grandmother live 4 hours apart. And about a month ago or 2 months ago, she called me just before she was headed to her daughter's. And I go, why don't you do me a favor? And she said, what? And I said, you're in the car and she has a 16-year-old autistic son. And I said, just try to listen to Be Your Own Banker by R. Nelson Nash. Please just try to listen to it on a 4 hour drive. At that time, we were only working on one policy, her policy. And she took that 4 hour drive listening to the Nelson Nash book, pulled in the driveway to her daughter's home, called me on the phone and said, we're starting a policy for my daughter, her husband, the two grandchildren now. And she stayed out there so excited that her 16-year-old autistic son was mesmerized by that book. And she got so involved in telling me what she had learned from listening to that book and took her one policy to 5 and 3 generations that her daughter had to come outside to find out what was wrong because she didn't go back in the house.
I love that. I've had the blessing of working with more than one family that does span 3 generations myself. I'm on the hunt for a family of 4 now. I want to. It's a metric that I want to hit of, great. Am I saying that right? No, great grandparents, grandparents, parents, and then a child. So I've gotten into 3 generations multiple times, but I'm looking for a family to implement it 4 generations now, and including my own. My goodness, including my own. Okay, I love it. I believe that's the case too. That's your own personal experience. That when you vetted the concept, got yourself a policy, used the policy, and you're like, it did what they said it was good. Okay, this is how it works. I want my second policy. That was that family's case when they wrapped their mind around the concept, really got into the source material for themselves, read the book. Same thing for me. We had our first policy and we were paying off bad debt for 6 months or so. And we're like, yep, we're doing it. Time to get another policy. That's just the natural progression for folks who really implement the concept. So tell me this then, Tess, if you would. Anything that you'd like to share on how you've used policies personally in your life?
I actually opened a business, and I'm actually working with someone to kind of start doing accounting because with my accounting background, I have a lot of people that reach out to me for that. But the idea for me is that I don't want to do the day-to-day accounting because I kind of feel like I did my sentence. 30 years was enough. And I do have a passion. I think through the process of learning to get my health back and becoming somebody that's vocal within these groups, I think that God's plan is for me to help people find this process. I think that there's something in the background of me being in insurance companies that provides a comfort to help people over the edge. So I think I belong on the front end of it. And then I'm going to put a team together to help people on that end of it because I get a lot of inquiries. But I've used it to help in that process and to help bridge me from the time that I left the W-2 world. Because when I first left the W-2 world, I thought I was going to do accounting full time because anyone who knows me, they may not believe this, but I've always been taught to be under the radar, to be seen and not heard. I was class shyest in high school. So for me to be somebody that's as vocal or visible as I am, was not something I ever saw, which is why I believe it was God's direction for me. And the policy is bridged so that I could get to this point, so that I could start a business and allow me to find the path that I truly believe is what God has always had intended for me.
I love it. Just using a policy for things that are your gifts, your direction, your journey. I love it. Beautiful. Is there anything then that you would say about where you went from vetting the concept personally, implementing the concept personally, to then deciding I'm wanting to do something on the professional side of infinite banking, working with people? What about that pivot? Do you recall that you also had to maybe work through or vet conversations that you had? Anything?
I do think that the education is key because even though I knew it and I understood it, even this family that we've gotten the 3 generations on, everybody in my life thought the same thing I did, that it was a scam. So in the beginning, I wasn't, even though I know the industry, I know the strength of insurance companies, my confidence, I didn't have the confidence to speak against the people that were fighting me on it. Even though I knew it worked, I didn't. So I think that educating, listening to the lives, getting on these podcasts, asking questions. Because what I think you'll find is, I mean, I started a business. I've helped take care of myself during the interim. I've learned how to take my 401k and turn it into self-directed so that I could put it in investments. That all started from this group of people when I learned the infinite banking. As I take money out of qualified funds, well, I run it through a policy before I loan it out. There is so much financial education that's available that even with my professional background was not something that I ever learned. The stuff that I've learned is not something that is taught in colleges or in schools. So I think education is it. I can't say it was one particular day. I think it was the continuing to build little by little. And then it gave me the confidence to tell somebody. And then the biggest, hugest moment was when this family, when I finally got through to somebody that for 3 years just told me I was being scammed.
I love it. Well, this business and any business takes perseverance, and if you're going to be good and good for people, you got to continue it. You got to continue your education. I believe strongly in that. I love it. Is there anything else then that you'd like to say to catch us up to date, up to speed? Where are things at now?
I'm actually very excited because, like I said, I first started in accounting and I was helping with some accounting within the team of the BYOB team. And then it was in June, Linus and I were actually at an event at the Security Mutual offices, and we decided to partner up because we thought that as a team together, we can better help clients from start to actually issued policy. So, that's been the most beautiful thing for me because I think I always lived my life according to the rules that I think somebody gave me. And it isn't until later in life now that I'm living the life that I believe has always been my God-given gift. And if there's one thing I could hope for everybody in this world, is if you can figure out how to clear the noise. And I think the noise is the financial handcuffs we're all under because of the system that we've been kind of forced under. I think it can. I actually think as a world we could heal. I think a lot of the pain and a lot of the trauma and a lot of going against each other is because we all feel like we have no control. And if we can get just control over this, the financial piece is probably the biggest. Well, our relationship with God is the biggest piece. And if we can get this financial piece under control, it opens the door to why we're here and what we can do. And then we can find pride in who we are and what we're leaving in this world instead of feeling like we're being dragged around with a nose ring being told what to do. I feel like I feel like we're being manipulated in kind of a way. I don't want to be controversial, but I do feel like it's wrong. It's not what it was supposed to be.
No, you're in a good place to express those kinds of views. I think so as well. You know, Scripture says we wrestle not against flesh and blood, so there's that. But then also there are actors that at large that it's not to their benefit that we be financially independent and autonomous, that we have strong multi-generational families. No, that's well received here. Let me ask you one more question that's occurred to me. One other thing that's occurred to me is having all the experience that you do on the inside of insurance companies, and now from personally implementing infinite banking and professionally helping people. What do you think is going on in the wide world that is maybe bringing discredit to whole life insurance, particularly infinite banking, right? Because there are lots of messages out there. What do you think people are missing that they should hear? What do you think that they are hearing that, as Nelson would say, most people's understanding of life insurance is, based off of somebody else's misunderstanding anyway, right? But what sticks out to you from the landscape right now that if you could be the one to rectify it right now with something that you would address, what would that be?
I think a big issue that we have is I want to call them the bad players. And I think it's because this is such a beautiful concept, but not everybody goes at it. Like we take reduced commissions, we specially design the policies for higher cash values. I think the unfortunate thing is that there is greed, and the greed has allowed there to be we're competing with the people that are claiming to understand this process, but they're doing it in a way that gives them bigger commissions and they're not totally understanding the process. So I think we're competing against years of government intervention, but even if this part would start to open up, we've got the bad players that are kind of in there, the IUL people or the people that are writing these policies, but they don't necessarily know how to write them, so they're not strategic, they're not specially designing them, they're not reducing the commissions, they're not teaching their clients how to use them. Because I've run into a lot of clients, even within our own areas, where I'm like, you need to get back into the arena or into the campfire because you started with the policy and then you walked away. And you've got to stay in it and understand it and operate it. Because if people stay in it, educate, and just take a few steps to operate and use it, it will grow. But if people come in, they grab the policy, somebody grabs a commission check, and they all walk away, we're no better than how we started. And I think our biggest obstacle is we've got to fix that part so that we can grow our area and influence the not so ethical players. So I think we got a little bit of work to do inside. And then once we clean that up, it'll expand out. And I think this team is doing amazing things like with the vault and with the educational things. I think we're starting to make some groundway. And as soon as we continue to open that up, I think we will overcome the greed players. And once we overcome the greed players, my gut is telling me this is gonna, I believe, maybe I'm extremely hopeful, but I believe I'm gonna look down. I always say that the day I'm called home, I want God to high five me and say, you may have started in the ninth inning, but you did one job. And I want to look down and I want to see that, man, these people, like 5 generations, we're going to the 7, the 8 generations, and that they're healing the world because they were released from the financial part and we all started to help each other. Because I think unfortunately, we're still in a world that is pitted against each other instead of coming together. And I feel that there's the beginning of it. It's just that we've got to make ourselves a little bit better so that we can push the bad guys out.
Well, I definitely think that we should always be making ourselves better. And I also believe that when, what's that saying about, you know, something along the lines of when bad things are happening and good people do nothing, it gets worse, right? So yes, we should combat the greed that's out there, and we should combat complacency. That way we do keep improving ourselves. That's one of Nelson's key principles is rethink your thinking. We should always be growing. We should always be improving. Well, I'm always really appreciative of, what infinite banking means to me and what it's done in my life. So I like picking folks' brains and saying, what's your read on the landscape? I think it's only up from here as well. But again, good people need to keep the good work moving forward. So that's what makes me so very appreciative of this conversation in particular, because I see you doing that and I appreciate you being here. Let me do this. Let me ask before I forget, how can people best reach you?
They could actually reach me on Facebook or on Instagram or on TikTok. I will say again, my book, Courage to Change. And in the back of it, I do have a page that lists all my, I do have like a listing of all my Facebook where you can reach me.
Perfect. And I can get a hold of all of that and make sure to put that in the show notes. Anything that you'd like me to about your contact info, about the book itself.
And I want people to know too, I think that there's beautiful things on the horizon. And I don't think that our system is broke. I just think there's always an opportunity for us to get better. And as we get better, I truly think I feel in my heart that we're going to push out the bad players and it's going to grow. I think in my lifetime, I'm going to see some amazing changes. I believe it. And I'm already
excited.
63, so that's pretty exciting.
I'm excited about what the future holds as well. Tess, if you're ready, I'd love to have some rapid fire questions with you.
Sure.
All right. What is a current favorite book or podcast of yours, other than your own, of course?
I love all things Money School. I listen to every single one of them. That's the joke. I haven't missed one.
And that's going to be The Money School by Chris Noggle. How about a favorite hobby of yours?
My favorite hobby, but it's a health thing, is I walk every morning at 5 a.m. with my mom. I love it.
That's a layered, healthy move, right? Because you're with somebody important, but you're doing something physical. I love that. How about, do you have a hidden talent that people may or may not know about?
You know, I'll never give up. I have a medal in the other room. I rode 300 miles in one weekend on a bicycle. I'm a certified scuba diver, and they told me my instructor pulled me off to the side 2 weeks. It's in the book. My instructor pulled me off 2 weeks before the certifying dive, and he said, "You're a weak swimmer. You can't make it." And I said, "Please don't make me quit." And he said, "All right, I'll let you test." And I swam 100 laps a day for 2 weeks, beat every guy, beat every girl in class and five guys. So I'm like a determined little bugger.
I love determination. Okay, I love hearing about that. How about what's one of your favorite quotes?
You can't start a new beginning, but today you can create a new ending.
I've never heard that one. I like it. What's, well, you already said that. Da, da, da. Oh man. Who's the most impactful person in your life, or has been the most impactful person in your life, and why?
You know, I'm gonna say at one time I would have said Duck Vong, which is the guy that got me started on the journey for health. But I'll say now it's Chris Noggle because I trust him fully, and he's been there every step of the way for me if I have questions and I love this, but like sometimes I'll send him a message and I'll say, "Chris, somebody wants me to take this," and the response will be great or oh hell no." So I love that New York strong. He doesn't mix words. He doesn't have time, but if I ask, he'll tell me, and he'll tell me like it is.
It's very valuable to have somebody in your life that will tell you things how they are. How about sunrise or sunset?
Oh, I love them both if they're on the water and I can watch the colors.
Okay, I'll accept that. Normally I wouldn't, but because you put a clarifying thing on there of on the water, fine. Beach or mountains?
Oh, mountains, water, sunset or sunrise. We have a theme here.
Right? Well, okay. Fire pit or movie?
I like the beach the same way too, though. Water, sunset, sunrise. Okay.
That's fair. That's fair. Fire pit or movie?
Fire pit or movie? I'm going to say fire pit. I like the conversations with the people and nature. I think nature's healing.
I do as well. What's one of the best pieces of advice you ever received?
I think that we have to accept people where they are, love them where they are, and through our example, maybe we can help them.
What characteristic do you value most in a person?
Honesty, integrity.
Right. All right, and then one more. I got this one from my kids, Tess. If you had the ability, would you rather be able to breathe underwater or fly?
Oh, oh, oh man, where did they get that one from? I want to do both, but you know what? I'm going to say fly because I could get pretty close to the water while flying. Only because I want to do both.
You're so creative, and you're like, how can I? Yeah, how can I pick one that's still going to ultimately maybe kind of lead me to both? Okay, I can appreciate that. Tess, this has been an absolute pleasure for me. I'll definitely make sure to get your information below in the show notes where people can reach out to you. Any last words?
If there's ever anything I can do to help anyone, please let me know because I truly want to see and continue to connect with people like you because I believe we're the beginning of creating a world that will be better than we ever dreamed of. It's possible, and I think we're on the beginnings of it.
I love it. Thank you so much.
Thank you.
Well, this was an absolute pleasure for me to get all this insight with Tess. Her contact information will be below in the show notes. You can find me at durhamtalents.com. My hope is that you live and leave a lasting legacy. Have a great day. Take care.